Hey, folks, welcome to InTheMoneyStocks.com's live trading action video. My name is Gareth Soloway, Chief Market Strategist here. Today's date is Monday, July 1st, 2019. All right, folks, so let's talk about the market action today. I think that's an important factor. It's really the main factor that is going to be discussed today in terms of analysis. Markets opening at a new all-time high, but basically selling off from the get-go. What's going on here? So the general thought process, if you look at the trades being put off pre-market, light volume in the overnight allowed the buyers or the institutions to bid the market up substantially, so it opens high and then they sold into the average investors who are putting money to work. So again, if you're an average investor or many average investors out there, you heard the headlines over the weekend, you had money on the sidelines, you said, oh yes, this is good news towards the trade war ending, you get ready to buy at the open. Institutions know that. So what they do is, again, they bid the market up on super thin volume in the overnight. It opens high and they sell into your buying. And again, we can take a look at the intraday chart of the S&P here, the SPY. Look at that. Opens here and look at that selling pressure. I mean, that's tremendous. I mean, you're still up on the day, but you're substantially. I mean, at this stage of the game, you are 2 points, 20 handles on the S&P off the highs of the day. And this is a game that the institutions play on and off. So when you have situations where there's an overreaction to news, so everyone gets robust going into the weekend, Trump meets with Xi, they decide to call a ceasefire, the institutions know they can play the average investor. They know that they can bid up the markets pre-market. So like a hypothetical would be like it takes them $5 million to bid the market up, but then they unload $50 million of ES contracts into when the market opens and the volume increases. You see what I'm saying? So it's worth it to them to use that pre-market thin volume to push the markets up so they can sell into it. Overall, it's not that I don't think the markets can go a little bit higher. I want to be clear on this. I still think the S&P gets through 3,000, very close at this stage, only about 50 handles away. But the institutions have to be looking to, and they are looking to, pare their long positions down here. Needless to say, we're up tremendously. Even if it gets, think about if you add up all the big institutions, all the big hedge funds. I mean, they have probably trillions of dollars long in the market, right? They can't unload that when it pierces 3,000 and just unload it all. They'll crash the market. So they have to do it in periods here when the market allows. And today was a great opportunity where they suckered in the small investor early on and they unloaded into it. Okay, and again, you can see the fade today. I mean, this is just case in point. I mean, do you think it's little mom and pops that are selling that are driving down the market here? Heck no. Not mom and pops. They don't have the money, 100 shares of the S&P or whatever it is. They don't have that power. Institutional selling, and they're just selling. And that's why the market generally goes lower, because if the small investor who was buying was pushing the market up, then that's a different story. But again, the institutions are okay fading the market. Now, we're into the late, the early afternoon period. A lot of the institutions are going to lighten up. My guess is markets float sideways into the end of the day, maybe even up a little bit from here. And again, I think you'll see a repeat performance in the coming days where the market will trend generally higher, but you'll see parts of the market, over time, especially in the early morning period, some selling pressure. All right, so that's the big thing here. I think the other thing to remember is that, as an investor, you have to use your brains. You have to think logically. You can't get caught up in the hype that the media spews. So over the weekend, the headline on Market Watch, on this website, on that website, on the TVs, Trump's, truce, lighten the restrictions on Huawei and all. But if you think about it, what actually was achieved? There's still no trade deal. Yeah, they're going to start talking again, but I mean, you're talking about thousands of pages of trade deal. So nothing really was accomplished, which is another reason why when the markets gapped up as much as they did, you can't trust it. You can't trust it. You have to understand. And again, if you think about it logically like that, yeah, markets are it's a small positive, no doubt about it, but you shouldn't have been up 35 points on the S&P. Right now, we're up about 18. You see what I'm saying? So anyways, that's going on there. On a technical basis, if we go back to the daily S&P chart, notice how you have a pivot high here. You made an ever so slight higher pivot high here, and then same thing here. So you can almost, look at this. If you connect the recent highs, pivot to pivot to pivot, I mean, you're kind of bumping up against this level. And it is a rising trend line, so in theory, we could keep going and making slightly higher highs along it. But there's no doubt that's a technical level right now that seems to be triggering these institutional algo sell programs once you bump up against. I mean, we saw it right here, right? You saw it here, and then look at the next few days. Here we are again, and you're already selling quite substantially today off those highs. All right. The other interesting thing today, if you look at the oil chart, right, the USO, oil was right back to the highs from last week and has faded substantially. Now it's still up a little bit. I'm actually short oil with Research Center members, and we're in the money on this trade. But the reason why it's fading again is because it was a lot of hype. Yeah, oh, they're talking again. They're this, but in reality, there's no difference from where we were on Friday, right? I mean, there's no agreement. There's no this. The only thing that Trump didn't do was he didn't impose more tariffs, but those tariffs weren't on Friday anyway. So again, it's another situation of nothing has changed. All right. Now again, I want to be clear on this. I think the market could still inch up, especially this week is a light volume week with July 4th. Markets are closed half day Wednesday, closed on Thursday. So I think 3,000 is probably achieved by the end of this week or early in the next week. But I will heavily start shorting the market once we get over 3,000. I think you pierce 3,000 by 25 or 50 points max. And I think that's the topping point on this market. And I think also there's a bunch of things coming down the road that are going to be very worrisome for the market. So not only the trade issue, right? I mean, so obviously that's something, but you have to also think about the Fed. Is the Fed really, think about this too. It's almost kind of a negative, right? Because if a trade deal starts to look likely, then the Fed's not going to cut interest rates because a trade deal would be like a stimulus. I mean, let's say the trade deal's done and you cut out all tariffs. So tariffs go away. That's a huge stimulus. So the Fed then would be like, wait a minute, let's not cut, which is a negative for the market. The market's been juiced like on steroids or on like a drug. The Fed is a drug to the market. Every time there's a hope of another rate cut, the market goes higher. So anything that would be strengthening to the global or domestic economy would then be a negative for the market in theory, right? Which is crazy. I mean, it's crazy to think that we're at the point in this world where strong good news is actually bad news, but that's the way it can be viewed and could be seen. All right, so that's where we are right now. Across the board, I have a bunch of my eyes are on a bunch of possible shorts, but I still want to see how this market plays out the rest of the week into next week, especially with light volume. You don't want to get overzealous and start shorting heavily with the light volume this week. But today, I'm very curious on the S&P to see where we close. Very curious. And again, we're just ever so slightly off the lows of the day. This to me is now, institutions are pretty much done. The volume's too light at this point of day to really be dumping. Large size. So that's where the mom and pops actually take over and the market could float up a little bit as money comes in to go to work. All right. I just wanted to pass that information. I hope you find it useful. This is the type of analysis we do in the Research Center here at InTheMoneyStocks.com. I hope you come and join us and learn and take the trades that I'm taking because we're making money, guys. All right. Have a great one as always. Come join us at InTheMoneyStocks.com. Take the 7-day free trial.